numbers. And of course, we know that Growthpoint delivered an increase in revenue of 28.7%, this from the previous half year, with its distributable income up 24.3%, both reflecting the remarkable growth of the business. Norbert Sass, CEO of Growthpoint, joins us now in studio. Norbert, it's always lovely to have you in studio. And maybe let me start off on a negative note. If we just look at the economic fundamentals of South Africa, one would assume that property portfolios are certainly under pressure. What has been the experience of Growthpoint?
I think pretty much in line with what you're saying. I mean, it is really tough out there. The South African portfolio is definitely experiencing tough times. You know, you might not say so when you look at some of our key ratios. Our arrears are in good shape. Our vacancies have actually come down. Our cost-to-income ratios are under control. But if you look a bit deeper down into rental and rental growth and those sorts of numbers, it's evident that those numbers are under pressure. And it's all around retention of existing clients and I guess the cost of almost attracting new clients into the portfolio. And that's definitely showing in the numbers as well. I think it's to our credit and to the credit of the business that, you know, we do have a number of other let's say, assets in the portfolio which are performing well, which is obviously the V&A Waterfront and then the Australian business.
Now, what I saw just on the vacancy rate, it fell below 5%, which I think is the lowest we've seen in a number of years. With your mix of business, you've got retail, you've got commercial, you've got industrial. How does that figure relate to those various component pieces? And is it better in some than others?
No, absolutely. So, I mean, the retail portfolio is, the vacancies there are about 2.5%. Offices are just over 7%, and industrial probably closer to about 5%. So, retail remains very stable. But, you know, you've got to understand as well that retail and managing the vacancy in a retail centre is quite an art. So you'd sooner have tenants in situ or in the premises that are paying very little rent or possibly even no rent than have the vacancy. So that, you know, you do manage that number. Offices to a lesser degree, and industrial, again, industrial, the dynamic is, you know, an office building, you can still have it 50% let or 70% let. An industrial property could be as big as 25,000 square meters, and it's either let or it's empty. And so the dynamics in the three sectors are all very, very different.
You spoke about the structure of the portfolio. South Africa sits about 76.7, if I've got the numbers right. But also we know that you are exposed to Australia. Long-term play, are we going to see a rearranging of that portfolio, almost a less exposure to South Africa and an increasing exposure in terms of offshore investments?
So, I mean, this set of numbers actually shows the opposite. In fact, you know, the Australian business made up almost 18% of our total distributable income in our prior reporting periods. This time around, it's closer to 15%. And that is as a result of the acquisition of AccuCap and Cycom. So we did a big takeover about a year ago. Those numbers are reflected in the 6-month numbers now for the full time on a consolidated basis for the full 6-month period. So a bigger weighting to South Africa and South African earnings, actually diluting the contribution from Australia and the V&A Waterfront. I think it's fair to say that the investment dynamics in South Africa at the moment are also challenging. Debt costs have risen. Yields on good property are still low, so you've got what we call negative gearing, so it doesn't make a lot of sense to be rushing in and buying a lot more in South Africa. The direct market also takes quite a while to adjust. You know, the listed sector is dynamic, it adjusts in a day. The direct market and sellers' expectations of what the property is worth takes probably 6 to 12 months to adjust. Yeah, we certainly like the dynamics in Australia and the Australian market. You know, the investment dynamics are very positive. Positive yield spreads of 2 to 3%, access to debt, the economy there is growing at 3%. So, you know, we certainly would probably be investing a bit more offshore and less locally in the near term.
Final one from you, Mark?
Norbert, you have to look through the cycles. You're sort of developing property and so even in tough times, you're probably doing that. We live in a very murky world at the moment, and it's difficult to get line of sight. From an investor's point of view, what would your guidance be on that, and what's your strategy insofar as property development is concerned?
I think that's exactly right. People don't often appreciate that property is a long-term asset, and probably no better example than the V&A waterfront. You're having to invest today for returns tomorrow, or maybe even in 3 or 4 or 5 years' time. In this world that we live in, you're under pressure every quarter, every half year to show dividend growth, to show earnings growth. And I think investors need to be patient. They need to understand the asset class and understand that property is not something that you turn overnight or within a quarter. You're talking big direct physical asset, you're talking billions of investment, and that takes time to generate the returns.
Patience seems to be the key word. A very big thank you to Norbert Sass. He is the CEO of Growthpoint, coming into our Johannesburg studio, as he always does on Business Tonight, to walk us through the numbers. At this point, I also say a very big thank you to Mark Ingham from Ingham Analytics. After his 2-year vacation, apparently, according to Karabo, we're taking a short break. When we come back, we take a look at the Great Lakes Private Sector Investment Conference that took place in the DRC. So we'll see you in 2 minutes.